Hi guys, this is Dan. Today is November the 8th after the market close, and we're going to start off looking at a chart of S&P 500. And what I want to do here is simply show you, this is black and white screen. We don't have the colored one here today. Hopefully you get a better idea because this screen gives me more details. And then the colored one, they are much prettier, but this is not as pretty, but it is substantial. So now let's take a look at it. What happened yesterday? This was the election day here. Okay, 11/6, and this was the red candle here celebrating the election, and this was another red candle here celebrating the election plus the fiscal cliff fear. Now all of kinds of things are escaping into the market here, is terrorized. Actually what it is anguish, anxiety, and dissatisfaction with the results. Wall Street was hoping for a Mitt Romney victory, which didn't come, and they were heavily supporting him during the presidential election. That didn't happen. The chances were that he may get elected, and he may get elected. It did not transpire because the biggest Frank Dodd Act was the stumbling block, is a stumbling block for Wall Street, and Mitt Romney would have removed that probably, or not had implemented it the way it is being done. Actually it is not implemented, but the threat of that implementation is always on the head of the Wall Street and has been fighting it. So the Republican presidential candidate perhaps would have prevented that. So as a result, the people who operate these markets definitely are not very happy. When they're not happy, they can bring this market to the knees and some more, till they can punish you to the extent that you cannot walk around. And this is exactly what this happened here. It happened here before, here last year, and a couple of other times. I've seen 4 or 5 times in the last 3 or 4 years that this anger and frustration comes in here and it just beats upon the stocks. Actually this chart is not that damaged. It is hitting the 200-day moving average here, and the way this candle looks like, if you look at it closely, it closed on the low of the day, and what that implies, the selling has not stopped. Had it stopped here, I would have seen. But look at this. We're going to go 2 days 5-minute chart and take a look at it very quickly. This is where the market was. Dropped yesterday, moved up here. Thursday it went up a little bit, and then 1400, and splashed down another 17 points to 1382 and hit that 200-day moving average. And probably, let's see what it does tomorrow. There are no guarantees on it here. The market is not extremely oversold because I'm going to bring another tool here. Take a look at it. This tool is McClellan oscillator, and I'll show you because I've been studying this thing this afternoon. I looked at it. It's going to come here. McClellan oscillator is an extremely good tool to use, and it is giving me a reading of 100 and minus 128. That is not an extreme reading. That's just an oversold reading. So the market has a lot more capacity to go down a lot more. Let's take a look at some other indexes here, and I'll just keep it here on RUT, which is also a damage chart. Take a look at it. The broad market has not fared as well as the S&P. It broke through that 200-day moving average at 793. Extremely oversold, but extremely, yeah, it's oversold. And let's look at the Dow Jones. I'm going to cover that in technology as well, and then I'm going to run through some charts here. Look at this, 12,800 nasty candles here. This thing, let me just turn this study back to the stochastics, and so that it is not extremely oversold. But let's take a look at NDX technology 100, and you can see that bad picture here. That thing broke through it, and that is what is causing this stock, Apple, to go down into the pits. Extreme amount. Let me see what happened. Okay, AAPL, let's get that right. Okay, here we go. Apple is just been demolished at 537. It broke through that 200-day moving average, and it probably end up here at 525 tomorrow. The volume was heavier again, some panic selling, extremely oversold. And the other stocks, which is Google, also dropped here, and we closed that position here because it broke that support line. This was a bear flag. It broke that trend line extremely well, and I closed the position right there. So that is all for today. The market direction is precarious.